Now is the time to buy stocks. You must buy the dip, leverage your house, sell the kidney, do what it takes. At least that's what some are saying. There's just one big problem. Let me show you this first. Russia's seen restarting gas exports from Nord Stream 1 on schedule. So the videos previous to this one, I talked about what was happening here. There's a scheduled maintenance on the pipeline. I believe it was 10 days. And there was fear that they wouldn't start that back up after this period. It seems like they are going to be able to get that back up and running. Now, this is obviously extremely important. Nord Stream 1, you got Russian gas, it comes into Europe, and they've really been increasing their exports over a number of years. This is important. You see it on one level because of what's happening with commodities and so on, and because of the geopolitical aspects. But this right here was the reason that the markets moved up on this particular trading session. The markets are really running on fumes, very thin liquidity. And this is important because that means you can have these big swings left, right, and up and down in a very short period of time. And it happens to an accelerated degree when you have this very thin liquidity. So that's what's happening here. This is one example. Okay, look at this. Let me show you. One stock that moved up. Netflix losing nearly 1 million subscribers. The stock went up. The stock soars. You can see that right here. But look at what this means. Not just Netflix, but see what happened in the previous cycle. If you watch this, not even previous cycle, but let's just talk about the 2020 up until today. If you looked at what happened, a lot of the stocks that were being purchased in that early part of 2020, a lot of them, not even stocks, different things that people can invest in. I don't want to call them assets, but they were garbage. They were a heaping pile of garbage. And I say this to really stress a point, is that people were throwing money at anything. It's really, shameful to see what happened over the period, and it creates a world in which we have increasing risk. Now, I'm not talking about Netflix in that way or anything. I mean, this, it's hard to really value a company despite what some analysts believe. But I just wanted to show you that as soon as the markets came down and we feel that we're at a point in which, hey, this is the right time, the market everything that was doing well from the early part of 2020 just gets bought up again. And it tells me that there isn't fear in the markets, that there hasn't been complete capitulation and the investors say, I want out. Retail investors have been buying this entire time, the entire time. And that's, in my opinion, something that we should be paying attention to because it shows the risk appetite of that retail investor. What are they getting into? Well, you can see what's been happening partially as a result of the strong US dollar and other factors. This is the monthly change in the treasury holdings of foreign official institutions. So you could see that it has been not doing well other than this one particular month. Generally, a lot of these foreign institutions have been selling off of US debt. One in particular, China. And you could see that they sold quite a bit. In fact, they are now down under $1 trillion in holdings. This is quite significant. If you go to a search engine, you type in major foreign holders of treasury securities. I'll say that again. Major foreign holders of treasury securities. There is a video about this on one of the playlists I have. If you go to my channel, you will see it there. I tell you exactly how to do it, all the pages, all the links and everything. And this will basically bring up this page from Treasury's website, and you will see it for yourself. You can look at who's the biggest, what they've been doing, and so on. And just noting the fact that over the last little while, they had been selling. They've been selling for a long time, in fact. They peaked out, either in 2013 or perhaps in 2011. And generally, they've been weaning off of this US dollar. Now, I think that's important because it tells us what's happening underlying everything I'm about to share with you. Okay, I'm going to show you everything you need to know about the stocks. about the stock market, about equities, but also other factors here. Every piece. You ready for it? Let's go. Hit that thumbs up button. And of course, you got to follow this channel because nobody does it like I do here. Rapid fire. Let's go. Fund manager survey. The fund manager survey is basically a Bank of America. They have this very frequently, and they get insights as to literally hundreds of billions of dollars under management here, what they believe are happening. Fund manager survey, most bullish cash and most bearish on equities. That's as of July 2022. And this just gives you an idea of the sentiment now potentially flipping, because when we go in one direction, it usually ends up flipping the other side, at least temporarily. Okay, so you can see cash, and under that, alternative investments. And what does that mean? Basically anything. It could be watches, it could be art, it could be anything like this. And at the bottom of the list, equities. Okay, global growth optimism is at all-time lows. Fund manager survey, net percentage expecting stronger economy versus net percentage overweight equities. Both of these down significantly. Cash levels are at their highest. Of course, when they're holding cash, that means they'd rather keep the cash that they know is losing value versus putting it into real estate or stocks or bonds or what have you. Okay, and you can see that right now. That doesn't mean there's a lot of cash out there. Okay, I don't care what they say. This is not a lot of cash. It just tells you that it's more than what they had before. That's all. Equity allocation versus cash is the lowest since 2008. So when we start to see this comparison, then we can judge it as it was. And you could look, last time it actually was quite low, it was in April of 2020. But we haven't been at these depths since October of 2008. Looking at this, you could see the Bank of America bull and bear indicator currently zero. It doesn't get any more bearish than where they are, at least according to this particular indicator. Recession, now consensus. Net percentage saying that a recession is likely. Okay, and you look at this, we're at peaks we haven't really seen except during 2020's fiasco as well as 2009. And by the way, March 2009 was the bottom, the absolute bottom of the market situation back then. So I can go on, and I will, but let's just talk for a second. To anybody that made it this far into the video, I'll give you more details about that. But let's just break it down for a moment here, okay? What's different about what I showed you here? Looking at a financial crisis 2020, 1987, whatever the case may be. What is different about today than everything else that's happened? Even if we just take it from the financial crisis up until today, what is different? What is different is that the Federal Reserve right now is seeing inflation rising dramatically. They need to save face. They need to ensure that the market believes what they say. Okay? And so right now they've been increasing their interest rates. They've been quantitative tightening a small amount. And so they're doing this at a time in which the entire world is going through the same thing. High inflation, higher interest levels, and of course, quantitative tightening. So the market is heavily, absolutely, and I don't need to stress this because I've done so many times, the market needs that liquidity. It needs the drip, okay? And if it doesn't get it, the markets will struggle to permanently move higher. And that is a simple matter of fact. Ever since 2009, markets have been entirely addicted to the easy monetary policies. So some will say the Fed will not let the markets crash. It is a simple matter of fact. Well, that's fine. You could argue that. But I'm looking at the market here, and S&P 500 is almost at 4,000. The markets are not really down much. So that argument just doesn't make any sense. Look at the S&P 500. It is not, it's off its all-time high, but certainly it's not that bad. It was approximately 5,000. Now it's approximately 4,000. Okay. Look at what's going on with jobs. There's so many empty jobs. The U3 unemployment rate, which is the metric they love, is at near record low. And all these indicators, I won't, recite them all. I do so often. All of these things, and by the way, inflation up just to such a degree, then my friends, why would the Federal Reserve backtrack from their policy? What are they trying to resolve? The markets are okay. Jobs are doing well. Inflation is out of control. You see, why would they deviate from their current plan? This is the one problem. You see? So let's go. Cover it really quickly. Lower inflation expectations means lower interest rates. You can see this right here. The net percentage, the darker line, expecting a higher global CPI. Not many. Okay, and then you see a net percentage expecting higher short-term rates. That has started to turn down. CIOs and CEOs want to reduce debt, not increase the CapEx, the capital expenditures, or buybacks. And why? Because debt costs are going up. So now is the time to pay down that debt. This is just showing us what do you think is the most likely reason for the Fed to pause or pivot in 2022? And the belief here is that inflation measured by the garbage PCE will drop below 4%. So the Fed's garbage indicator that they use for inflation, they would like to, see that go down. If it does, then the Fed will say, okay, our job is done. Investors no longer expect higher bond yields. Okay, looking at this, cash levels highest since 2001. I believe I covered that. Long US dollar is the most crowded trade. And usually when there is a crowded trade, and it can go on a little while, things flip. Just look at commodities. Okay, that really changed big time. High sticky inflation is the biggest tail risk, and that is a concern. And that's why the Federal Reserve, which they seem to be doing this two-faced thing. But anyway, the Federal Reserve, they can't just say, okay, we'll just leave it like this. They need to ensure that inflation rates are coming down, and they will continue with their policies until they see any difference. Fund managers survey investors are most long healthcare and most short consumer discretionary. And you see that right here at this time because they're concerned. They're saying people are not going to the store. They're not doing this and that. But as I've heard from many of you, and I've seen myself, in a sense, you go out there and you see people buying just about everything. But the data doesn't deny the fact that credit card usage at an all-time high, savings near an all-time low. So you take what you want from that. They're long cash and they're short equities. Okay, so I think you get the point here. I think it is so key to understand this. Okay, and I just wanted to leave you with this, okay, to bring us back full circle. IMF to Europe. Governments must plan to share supplies in an emergency across the EU. Act decisively to encourage energy savings while protecting vulnerable households, and this is the best part, and prepare smart gas rationing programs. He also adds in here what smart rationing exactly means is unknown to me. Wow. What are they planning here? What's going on? We do not have control over the things that we rely on so much. And that's my message to you. Take control with anything that you can. Can you grow a garden? It's not hard. Get some dirt, get some plants, make it happen. Make it happen. Do what you need to do. Get the natural gas generator. Get a solar generator. Get a diesel generator. Get solar panels on your roof. Whatever it is, whatever makes sense for you in your area. Don't go out there and buy, Dogecoin or whatever the next cool thing is. Look at these things like investments. Make those investments today. They're going to pay dividends forever. If you appreciate this, hit that thumbs up button. Are you subscribed to the channel? If not, my goodness, why? Your button's probably broken. And in fact, I get messages, I don't talk about this enough. I get messages from people every single day. They say, hey, I just noticed I was unsubscribed from you. Double check that. You may have been unsubscribed, okay? So just hit that subscribe button. I'll see you on the next one. Every single day, I'm out here giving you the greatest and the latest. Take care.